freedom isn't the result of wealth. It's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and I'm here today with the one and the only Adam Penn. Adam, how are you today?
That's actually a false statement because there's a TV show called Stranger Things, and there's an executive producer named Adam Penn. I know because I got the Google alerts set up for my name. And
interesting.
Every time there's a new episode that comes out, I get an alert saying, Adam Penn, your name was mentioned. But it's
So you're not the one and only. Okay.
No.
And you're also not the executive producer of Stranger Things.
Not that you're aware of.
That's unfortunate.
I know.
There are several Dustin Baileys. One of them is he's a writer for one of the gaming magazines. I forget what it is, but like one of the like large online video game magazine publications. So it's kind of the same thing. Every time he publishes an article, I get the Google alerts about it, which is almost every day. So I'm really up on like what's going on in the video game world because I see his headlines show up in my email every day.
The comment on the executive producer for movies and TV shows, that would be a fun topic to talk about, is all the weird things you can syndicate, right? Because executive producers are normally the syndicators of the movie, right? Most movies are syndicated. We know people who have done Marvel movies, brought money to those, or Wall Street, or Broadway plays. So
it's a very good point. I actually, and I guess now that we've kind of fully covered that one, is that you can syndicate. You can syndicate movies. But no, that was something I didn't learn until I got around some people that were doing this. Was that the reason there's like 15 executive producers is often those are the people that were raising the money for the film or the TV show or whatever. So yeah, interesting tidbit. Well, I would be remiss if I didn't mention the fact that you're not in the home studio. You appear to be someplace else. So where in the world is Adam Penn this week?
Yeah, I am. I had an old boss that used to ask me that. I traveled a lot. I am in Memphis, Tennessee, in an Airbnb that we own. It says Penn Properties over there. I think that QR code would take you to our website to book. In Memphis, checking on some properties. We've got a construction crew out here that came from California going and doing some rehabs.
Good deal. So you and I are technically in the same state right now. It's a little weird.
We are just total opposite sides.
Yes. It would take an entire day to drive there.
Yeah.
Well, good stuff. Well, I don't know exactly when this episode's going to air, but you and I actually just got back, or I guess got back. You were kind of at and then left and have gone to a now other location. We were just at Ken McElroy's Limitless Financial Freedom Expo.
Yeah.
And had a good time there. And so I don't know, I thought it would be good to, I know you and I kind of spent more time on the networking side than necessarily going to some of the sessions, but I still think we kind of like came away with some things, and saw some stuff, got in conversations. And so I don't know. I've got something I mentioned this to you earlier, but I'm curious if you've got any takeaways or any big themes or anything that came from the event.
I think it might overlap with what you were going to bring up a little bit, but you said we didn't watch as many of the sessions. We weren't in every session. We weren't going from session to session. We were primarily there networking, meeting other investors and chatting with people, going around to the booths. And I actually think that's a fairly decent way to get a tone of how the market is doing, right? You're out there actually interfacing with people just compared to listening to the 10 speakers that are on stage. And the takeaway that I had is there are still people looking for deals, right? I mean, I think right now it's a harder time to raise capital. I think we've heard that a lot, whether or not it's an excuse that we just keep telling ourselves because capital raising is a little slower right now. But there's still money out there. I got introduced to one guy that's looking to place $300,000 into a deal, right? I met a whole bunch of other LPs that are looking to move money. And so just because some deals have maybe not worked out in the past 4 years with other operators, or because the market's been slower, interest rates haven't magically come back down to 2%, which I don't think is happening. It doesn't mean that people aren't still doing deals. And I think we've said this a few times, I think, on the show recently, is some of the best deals I think I've seen in my investing career are happening right now. While there's not a whole lot of people in the game, there's just not as much competition. It's not like every deal out there is some magical deal right now, but there is a lot of opportunity if you're continuously looking.
Yeah, no, I mean, that was kind of I had a different angle to, I think, the same takeaway, but on that last point that you just brought up, I thought, I don't know, I had heard people, again, being newer to this, I was in college during 2008, and so like I didn't live through that as an investor, but certainly been around a lot of people who had, and everyone talked about how it swings from, then deals were everywhere, right? Like you could find a deal anywhere, but there was no money. Either people had lost it because the stock market had crashed, or they were just afraid to let go of what they had. And so the deals were plentiful over here, but you couldn't find any money for them. And then it kind of went the opposite direction, right? And these things sort of go in cycles. And at the very end, 2020, 2021 into 2022, it was kind of the opposite, right? Everybody and their mother was trying to get in, and there was just money sloshing around everywhere, and stock market had ripped, and we had done helicopter money and all this stuff. And so like everybody was trying to invest, but good deals were
few and far between.
Exactly. And so I think this is just now like we've shifted back into that, right? And I don't know that it's like, it's not like, I don't think it was like it was in 2008 and 2009 when people are, you go onto the courthouse steps and buying just foreclosures for pennies on the dollar. I don't really think that's happening, but there's definitely distress, and there's more good deals happening now than has in probably the last 10 years, maybe. I mean,
5 at least.
5 for sure. Yeah.
And I think it's just more that the deals that are trading right now make sense in a long-term economic standpoint, right? No one is out there chasing a deal, right? I mean, some stuff in the single-family home space, but even that has softened over the last, I don't know, call it 6 months. Beginning of the year was pretty strong for sellers, and now it's more of a buyer's market. Not to say there aren't still great deals. Like we're doing 2 flips right now that I think we one of them we had incredibly strong offers on because we did everything, right? So I think it's just got to be the right deal. Yeah,
and I mean, I had a couple conversations with some folks about that same thing, and I think the market might be softening, but it's also location. Like, I don't know, Robert Helms always likes to say, there's no such thing as a real estate market, right? If you got there's an average price. If you got one foot in boiling water, other foot in ice cold water, then you're okay on average, right? But it doesn't mean that like either of those things are good.
Yeah.
And so like, I definitely, we're seeing that. I'm hearing that from people. I think in certain markets, if you are a buyer, it's probably the best time it's been in the last few years. And in some markets, if you're a buyer, it's really, really terrible. And some of that depends on what you're trying to buy. The top end of the market still seems to be very competitive. Had lunch at the event with Jason Hartman, and he's trying to buy a fairly expensive house in the Phoenix area, Scottsdale area, and he offered at asking, all cash. And the broker, the agent came back and said, unless you are willing to offer at least 15% above asking, the seller is not interested in hearing any more from you. So there's that's going on, right? So like, and I think that's really common at the top end of the market right now. It's still very, very hot up there, but you get lower that, it changes, and then it changes by market. So
I think that's an interesting thing that I've noticed a lot. And I think Robert Helms talks about it a little bit, or at least he's mentioned it once. And I've seen it over the last 5 years of being in these conferences and investing more kind of nationwide. The wealthy are always looking to spend, right? Like they're not changing. And I walked into a jewelry store the other day, and I was talking to the guy, and of course they've got diamonds that are $1,000 and diamonds that are $90,000. And I said, what's the resale on these things? And he said, well, the high end ones actually they resell no problem, right? But people aren't trying to resell a 1 carat diamond. He's like, you go buy a 6 carat diamond with a great pedigree, it'll always trade for whatever you pay for it, as long as you don't have some massive markup on the trade. So, it's funny to see that the difference in markets, right? Like you said, some are cold and some are boiling, and I think that's it's a good analogy that people might understand for the real estate market.
But I think that kind of gets into the big takeaway that I had, which again was a little bit of a different angle on what you had. But that's just that there's still opportunity out there, and even in an environment, I mean, it's been depressed the last few years, right? Ever since Fed raised interest rates, and we've seen this not just the way people are talking. People are obviously more negative in the way that they're approaching things, and you hear more negativity about the market and finding deals and finding money and things like that. And you see it at events. I mean, I think Ken was saying, Limitless was down. I think they had 1,500 people, which is a big event, but that's down 600 from last year. So, by more than a quarter, that's pretty sizable, right? And I think some of that's indicative of the, just the state of the market and potentially, I don't know, is that a recession indicator? People not wanting to spend money to travel?
I think more so than the number of people there, right? Because they had RFK at the end of last year, which was a huge draw.
Yeah.
But we saw less vendors there, right? There were not as many people on the showroom floor. Some of that might have been intentional cutting, because Kenny was saying he didn't want people selling from the front of the room as much. But there were just less vendors there, right? I mean, there were vendors, and Aspen Funds is normally there, and they weren't there.
Yep.
So
that's a good point.
That there's anything going wrong with them, but people's businesses differ, and there's just less people kind of coming through right now, I think.
Yeah, and it's indicative of businesses pulling back spending and households are pulling back spending. But at the same time, you go around and talk to people, there's still opportunities. There's still deals being done. There are still good places to be investing and doing deals right now. And I think that was the biggest takeaway that I had, and that kind of hearing the conversations there and then looking back over the last couple of years is just, I think it's kind of the danger of if you get focused on one thing for too long, and that can be good because that thing, but then if your livelihood, especially from like an investing standpoint, is dependent on those sorts of deals, and there are no good deals to be had, and you kind of are forced to make a decision, right? You've either got to hold on to capital and let inflation eat it away because you can't deploy it, or you shift to something different. You kind of shift to where where your money is going to be treated the best. There's multifamily's been a good example of that, right? Like, we're starting to see more deals, but if you typically, like, the smartest investors that I know haven't really bought a whole lot over the last 4 years. And some of that's because the market just got so frothy, and they said, hey, these prices don't make sense. We're not going to buy. But that doesn't mean that all of real estate's bad, right? Like, there's some really, really good opportunities in retail, which is also a little bit of a counterintuitive thing, because you've got a narrative for so long was that Amazon was going to destroy all local retail. Well, that's, yes, maybe a brick and mortar store, but people still need barbershops and other local places like that Amazon's not going to displace. And so, we know some folks who are absolutely killing it right now in the retail space, and their investors are doing great. And so it just kind of shows that, like, that may not be the thing that's in the spotlight, or it may not even be the thing that, like, I don't have a lot of experience there, but simply because I've now gotten around some folks who I've started learning more about it. I'm like, okay, if this is where there's a good opportunity, then I need, as an investor, I need to start paying attention to that, because ultimately, if I'm not investing, am I really an investor? Like, if I'm just sitting on my capital, like, at some point you got to make a decision. Is there strategic patience, or should you actually pivot and go to something else where you can actually put some money to work? And I think the smartest folks that that we know and that we see are very good at finding those opportunities and not getting stuck in one single paradigm and saying, well, if this doesn't work, then I'm just not going to do anything. They always know that there's opportunities out there, and they go find them and take advantage of that. And I think that was the biggest thing that I was seeing just from talking to a lot of other people, is that there's stuff that maybe wasn't even on my radar, or that has been on my radar, but I've never really looked into. And I'm like, you know what? There's some good stuff going on right there right now. Maybe that's where I need to start digging into that more.
I have a kind of a tangential thought to that, and then maybe I don't have a whole lot else to add, but on the note of understanding markets and research and going out and doing investments. I was talking to someone who's had a stock portfolio a long time, and they were looking at it, an investor, and they've been earning 10% on it, 10 to 12%. And they're like, well, how would I compare that to a real estate deal? And I'm like, well, there's so many different pieces. Like, that's the thing that I think people maybe get a little lost on. And I'm not trying to make a whole different topic here, but I think people, when they are analyzing deals, they're like, well, I was making 12%. How do I do that over here? And real estate is so multifaceted that you have to understand how to look at it. I think that's something maybe I took away from the conference, is just the people that are out there doing deals understand all the different layers, right? You're not just going to look at what your brokerage account was on January 1st and what it was on December 31st, right? Because in real estate, you get depreciation, which is tax beneficial. You get probably some additional write-offs depending on how you're holding the real estate. You're getting cash flow. Eventually, you're getting depreciation. You're getting debt destruction on your mortgage, right? There are so many aspects to this that you don't even... It's so hard to compare it to the just one single number. Now, there's ways to compare them, but I think it's important that when you're going through and looking at investment opportunities, you are thinking about how many more options real estate gives you over just number go up, number go down.
Yeah, no, that's great. That could dive into a whole other topic. I was having a conversation with someone about, the importance of equity versus cash flow, and that, as I always like to say, you can't eat equity, and you don't want to play that number go up investing. I think that's one of the worst things you can do. I'll stop there, otherwise I'll keep talking about that for a long time. But I don't know, Adam, anything else to add on kind of thoughts or takeaways or anything else, anything interesting you observed while you were among the other 1,500 people at Limitless?
I continue to notice that the incredibly wealthy people in society all seem to own real estate. Maybe they have a great cash flowing business, but they own real estate. I mean, there was just conversation after conversation of people probably worth tens of millions, hundreds of millions, very wealthy, had either an IPO or sold their business. Talked to one gentleman that ran a REIT, and it was in the billions of dollars, and then they IPO'd it and he exited. I asked him what he did. He said he was loosely into commercial real estate. So kind of one of those, undersell what you do type of things.
Yeah.
And all of them are in real estate, right? What do you do with the money when you exit? Oh, I put it back into real estate, right?
Yeah.
Like, there's just so many benefits to it. You got to know what to buy. You got to buy in the right market with the right team. But I think in the long haul, it's where you want to be. So if this content is helpful, people, please share and review the episode, write a comment, send us an email if you got something. But honestly, liking it, subscribing it, that helps teach the algorithm that this is something worth sharing out to their platforms.
Absolutely. Thank you for mentioning that. Well, we can keep this one on the shorter side. Let everybody get back to their day. Unless you got anything else, Adam?
No, sir.
All right, we will mosey on out here. Everybody, we appreciate you listening. As always, like Adam said, go give us a review, give us that thumbs up on the App Store or on YouTube or wherever. Let the algorithms know that you like what you're hearing here. But we will catch you on the next one. Just remember, where freedom leads, real wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.